Welcome to Sir Lancelot's Real Estate Roundtable, your guide to mastering the realm of real estate in Central East Florida. I am Sir Lancelot Leonard, ready to uncover the secrets of seller strategies, home staging, mortgage mastery, and more. From Daytona Beach to Cocoa Beach, Lake County to St. Augustine, join me as we navigate the intricacies of real estate. As the leader of the Sir Lancelot Group at Florida Homes Realty and Mortgage, I'm here to arm you with knowledge and innovation, whether you're a seasoned homeowner or a first-time buyer, unveiling the kingdom of real estate, one roundtable at a time. Welcome back to Real Estate Roundtable, where we bring your insights from the top minds of real estate. Today, we have an exceptional guest who is on a mission to bring clarity and confidence to real estate investors when it comes to insurance. He's not just an insurance advisor, he's a storyteller, educator, and a protector of wealth. Jeremy Goodrich, the founder of Shine Insurance, has dedicated his career to helping investors safeguard their assets while navigating the complex world of property insurance. With years of experience, a passion for education, investors and educating investors, and reputation for simplifying what many see as a daunting part of real estate, Jeremy is the go-to expert for making sure your investments stay secure. So whatever you're seasoned investors or just starting out, you won't want to miss out this conversation. Let's dive into the world of real estate insurance with the one and only Jeremy Goodrich.
Hey,
Jeremy,
sorry.
Welcome to the podcast.
Lancelot, thanks for having me. Really excited to chat. Thanks for that intro. Hopefully I can bring some insight into a topic that's been the thorn in the side of probably a lot of your listeners and really causes a lot of trouble in deals you're trying to figure out, deals you're trying to underwrite, and maybe a deal you've already purchased. So I'm here to really answer a lot of those questions, pull back the curtains, help you understand what's going on now, what you can expect in the future, and take it from there.
Yeah, for sure. So, every great journey starts with a challenge, turning point, guide who helps navigate on, unknowns here. So, Jeremy, take us back. What inspired you to become an insurance guy? This is always, I always say insurance is so hard because I used to sell insurance, by the way, over 15 years ago. And back when I lived in Hungary, I was an insurance salesman, and it's selling the pain, basically. It's like compared to real estate, it's so different. Now, I know it's not just pain because you made it into sunshine, so it's like, hey, protect your assets because your assets are amazing and you want to protect those. So to take me back to the beginning, I heard a little bit about you being a school teacher and simultaneously doing insurance. So what was it that sparked you on this journey?
Yeah, I was a third and fourth grade teacher for 13 years. I taught eight to 10-year-olds everything from how to read and reading to writing to soccer, and we played a lot of indoor hockey, broke a lot of hockey sticks. I worked at a school where I kind of did all of it, and so that was really exciting. And I enjoyed that period of my life. I loved teaching kids. There was so much to it. And at some point, though, I just the credit card debt was rolling up. I made $27,000 a year for 13 years in a row, right? And it just wasn't making sense. And I literally had a lawn and landscape business while I was a teacher, and I would drive my big truck with my trailer and my mowers on it to school in the morning, park it next to all the school buses, teach all day long, and then mow all night until it was dark, and then continue doing that. And at some point, I was just like, look, I need to move to something else. My wife and now business partner already was third generation in the insurance world. We both decided to jump out of our jobs and start our own insurance agency, Shine Insurance, with the goal of changing the way people feel about insurance. And sometimes we do, some days we do that, some days we don't do that. But the intention really has always been to be an educator, a teacher, someone who explains how this stuff works, because really, it's all about peace of mind, right? Like what you're doing when you're buying an insurance policy is to have peace of mind. If I hit someone with my car and it hurts them, then, I won't have to pay for that out of pocket and go broke. If I buy a $10 million building and it sets on fire, I won't have to go broke to pay for it, right? It's the peace of mind of knowing that someone else will jump in and help you. And ultimately, that's like an existentially positive thing. Now, the way it's set up now creates a lot of negative, and we'll talk about about, how we navigate through all of that. But at its foundation, I think insurance is a concept that levels the playing field. If we didn't have insurance, only the wealthiest of the wealthiest would be able to invest in real estate because they were the only would be the only ones who have enough money that if the place burns down, it's just like, hey, okay, no problem. I'll just replace it with my own money. So I think that there's a real positive in what we do, but I also understand there's a lot of pain as well. And we'll talk about both in this conversation.
Yeah, that's awesome, man. So every investor, feels lost when it comes to insurance, overwhelmed, by all the jargon and policies, fine prints, and all that. What are the most common mistakes you see real estate investors making with insurance?
Oh, I think it's a frame of mind to start with. We can get into the details of the policies and stuff like that, but I think the biggest mistake I see people see it as just this commodity. You're just schlepping quotes and just getting the cheapest quote and then just picking the cheapest quote and then hoping that it's actually going to take care of you in a claim scenario. The reality is every person on your team, when you're a real estate investor, whether it's for small residential portfolio or for thousands and thousands of units or square feet in whatever asset class you're investing in, you want to have a good team around you. You know that about lawyers, you know that about accountants, you know that about property managers and brokers, real estate brokers, and everyone else. But for some reason, we see the insurance advisor as just this schlepper of quotes. And that's where the first mistake is. Because if you're not building a relationship with that person as well, if they're not on your team, if they don't understand real estate, if they can't connect you with that broker you don't know, with that lender you don't know, with that property you didn't know existed, but found out about and it was perfect for you and your deal with maybe some investors, if they're not a part of your team, then you're doing something wrong. And I think that's the number one mistake that people make is simply not seeing their insurance advisor in the same way as they see so many other people on their team.
Yeah, because it's always like the negative guy in the group. It's like, oh my God, I got to pay up this money. But they don't understand that anything can happen. I'm getting into construction. So, bro, things that
Mhm.
happen on a construction site, you
Yeah.
got to go into renovations. They don't understand that because they're not the ones doing the renovations. They hire a crew to do the renovations. They put those guys in there and they're like, oh, this could all go fine.
Right.
Guy falls down off a ladder or something. That is the insurance that protects you in that game
Yeah.
at the end of the day,
Yeah, I mean, if you're going to get into construction, workers' comp, right?
Yeah.
Injury to your employees is the most important coverage you have because there's such a high likelihood of having injuries on a construction site. Now, conversely, that's also might be the most expensive insurance you have. So that's going to be an expense on your line item that you're going to have to figure out. And
Yeah.
again, it's having the right advisors to help you navigate that.
So, how do you approach educating investors, and why is this such an important part of your work?
So I think that the biggest part is just educating is in my nature, right? If I'm going to be a part of an investment journey and I'm an LP investor in some commercial real estate deals as well as an insurance advisor, and so I want everyone to understand what this line item means from an underwriting perspective first, right? Before we get into the weeds of the policy and how it protects you or doesn't, just like what's the number going to be, especially in this current world. Texas is a great example. 4 years ago in Texas, insurance might have been $500 a unit. Right now, it could be, $1,100 a unit in a lot of places that it doesn't make sense. Sometimes it can be that expensive in Dallas. It's like Dallas isn't coastal, like what's going on there? And there's a lot of reasons for why it is. But I think the first thing is just understanding that number because if you underwrite wrong on the front end, then you get into your, due diligence and you're deep in there, you're 2 weeks from closing, and then you find out that line item, that insurance line item is twice as much as you thought it was going to be. That could kill the profitability of your deal. And I've certainly, unfortunately, seen deals die because of insurance numbers, especially in this current,
Can you?
Florida. You're in Florida, right? Like
Yeah,
it's,
yeah,
you get it wrong in Florida, you're in big trouble,
yeah.
right?
For sure.
Uh,
Can you elaborate maybe on a specific deal that had like a lot of challenges and you helped them out and you turned it around at the end with a good insurance policy?
Yeah, I mean, I think that there's a deal recently that I was talking to someone, 240 units, apartment complex, north side of Houston, and they have properties all over, but they didn't have properties in Florida, Louisiana, Texas. They'd never done coastal before. It was a lot of, Midwestern properties, and they were underwriting based on the offering memorandum from, the seller, and they were underwriting at $500, I think, a door or something like that. I looked at the property, looked at the history, had a whole bunch of losses, and just a short conversation was like, look, 240 units, an extra, it's going to be another, you're going to be lucky if you're at $2,000 a door. You're underwriting $500 a door. I'm saying you're going to be lucky if you're, 1,500 times 240 is $360,000 difference in your underwriting. And so we had a deep conversation about it. We talked about all the other options, and then that's where it ended. He called me a week later and he was like, you know what, we decided not to do that deal. It wasn't just insurance, but the fact that I had that conversation with you was, one of the pieces of the puzzle that helped me know, you know what, like, I don't know, I didn't understand what I was getting into. So I turned that deal around, maybe not in the way your listeners thought I was going to turn the deal around, but, sometimes not doing a deal is just as good as not doing a bad deal is better than doing a good deal, right?
That's
So,
exactly
yeah.
what I learned. I was JVing into a property as well a few years ago, and this is what kept on coming up all the time. Let's find a reason not to do the deal. Not find a reason why to do the deal, but
Yeah.
why should we not do the deal?
Yeah.
And if that's really high insurance, I mean, that's a really good factor. Like, look, it eats into the bottom line so much that it's not worth it anymore. So it's always trying to find those. And this is a perfect mindset for an investor, I think, is try to find the reason why not to do the deal. Because you could always find reasons why to do a deal. Like
Oh,
you
absolutely.
could find a reason why to buy a property.
Yeah.
It's just why not to buy that property and always, go on with that. And that's a great thing from you, doing that as a favor. It's no business for you, no business for them, but at the end you save them a ton of money probably down the line,
Yeah.
or a money
Well,
pit.
and yeah, and I think that, underwriting is interesting. Underwriting properties, and maybe AI takes over underwriting. I don't know, but it's really interesting how it happens, what decisions you have to make, and then where the volatility is. I talk about risk management a lot. Insurance is a tool. Insurance is a tool that we can use to manage risk, right? We can take more risk because we have insurance, and it can bail us out in bad situations. But risk management is a broader thing, right? Do you have fences around your property? Do you have lights that work on your property? Do you have cameras at your property? Have you properly surfaced the parking lot of your property? Like, all these things are ways that we manage risk, not only to make it safer so our insurance costs are lower, but also so that our tenants are happier, right? Like, I think that you really want to, if you're building a business right, a real estate business right, you're making money, your tenants are living in a safe, happy environment, and your employees and your team are well taken care of. Like, this is what business is like almost no matter what industry you're in. And so managing risk, I think, is that bottom line. And so when you're managing, one of the risk factors is the insurance line item in your underwriting, right? And one of
Right.
the problems in Florida, Louisiana, Texas in particular, is the volatility of that number. It's not only realizing that number when you're underwriting it on the front end, but what percent increase are you going to put for the next 5 years to know how well your deal is going to do? It's very hard to know the answer to that.
Yeah. I mean, we're going to elaborate on that a little bit further down the line, I think, because as a really interesting question or topic.
Mm-hmm.
Um, with markets evolving, and risks changing, what are the biggest shifts you see in the real estate insurance today, and how should investors be adapting to that?
Well, I think, whether climate change and having more storms more often is a huge part of the numbers. When you look at the property losses in the United States in 2021, it was a total of $6 billion. In 2022, it was $36 billion. And in 2023, it was $41 billion. We saw like a more than 6x increase in property losses in the United States from 2021 to 2023. 2024, fortunately, was a little bit better. And so I think that's the biggest factor in the property insurance world is, the fact that we just have a lot more storms. We also have a lot more lawyers making bigger losses and liability claims, a lot more roof claims for your roofs are getting, especially if you own a large property, your roofs are getting older. Suddenly a hail storm comes through and a roofer tells you, look, I know it's going to be $3 million to replace all these roofs, but I think we can get your insurance company to pay for it. It's hard to say no to that, right? The problem
Yeah.
is that insurance companies are now hip to that situation. And so you put all that together, and it's really a shift in the property insurance world where premiums for the last few years have been going up. Fortunately, in 2024, we had two good things happen. One, we had fewer losses, across the board, fewer losses. So that gave insurance companies some room to breathe. We shouldn't feel bad for insurance companies. They're doing fine.
That's what I was
But
thinking too.
yeah. No, we shouldn't feel bad for them. But they are for-profit businesses, right? They're
Yeah.
they're working, and then when they lose money, like, it's not a good thing. And then the other thing is that stocks have been decent in 2023 and 2024. One of the things we don't think about very often is that insurance companies work exactly the same as banks. When you put money in the bank makes money simply by investing your money while they have it until you pull it back out. Insurance companies, exactly the same thing. Most insurance companies do not make money on underwriting or the relationship between money coming in premium to money going out in claims. But they have your money for a period of time and they go out and invest it. And so in 2022, when the average on the stock market went down by 12% by the end of 2022, well, we had that huge increase in claims that I described earlier, and we had a really bad stock market. And so we saw insurance companies freak out. And that's why 2023, any of your listeners who have property know their insurance premiums in 2023 skyrocketed.
Kidding
And
me.
yeah, and in 2024 it didn't get much better, right?
Mine tripled.
Yeah, and that is the explanation of why. Whether we think it should be that way, happy to talk about all those things, but that is the foundation of why that happened. What we've seen in 2023 and 2024 is both of these years we've had decent stock markets, and then in 2024 we're also seeing that insurance companies are had pretty good outcomes for the most part on their underwriting. They weren't getting crushed by claims in the way that they were in 2022 and 2023. So the hope is that in 2025 and beyond, we see some settle.
Decline? Can we get some
I
decline?
mean,
I don't think any. I don't
I
think
think
any
if I,
company starts
yeah,
offering their product for less once they already got it up to
yeah,
where they have it. Like that's what happened to me. I have a fourplex. Okay, we had the three
yeah,
hurricanes come by. I live
yeah,
around Daytona Beach.
yeah,
We had two about 2 years ago, and then we had the one this year. The two that came through 2 years ago. I'm in a flood zone, AE flood zone. Okay,
yeah.
place was supposed to flood. We had king tide. We had two hurricanes. It didn't flood. Okay. I had
Hmm.
zero claims on the property, put a new roof on it, updated the electrical, but did not update the plumbing yet. My insurance company said, well, you done those great. Now you can have insurance, but if you want to get lower insurance, you'd still need to update your plumbing too. And I said, this is built in the 50s. I would have to dig out
Right. It's
everything on it. There's
crazy.
this giant oak tree in front of it, like
Yeah.
with roots all. I'm like, this is impossible task to ask
Yeah.
of me. And it's super expensive and $10,000. And I'm paying you guys how much? So
Yeah.
my insurance went up from $1,800 to $5,300.
Yeah.
One
Yeah.
moment to the next. And then I found, because we in Florida now, we have Citizens, and
Hmm.
through
Which, for your
Citizens,
listeners, is a state-based insurance company that helps to balance out the fact that in Florida, insurance companies, especially in 2007, 2008, just left. Everybody left. They were
yeah,
like, we don't want to offer insurance here anymore. And so the state of Florida created an insurance company that's there to, FEMA created flood insurance. It's also another example where the government comes in and just provides some support in places where nobody wants to provide the insurance. Sorry to interrupt you,
no,
but
no, thank you for
go ahead.
explaining
Yeah.
that.
Mhm. Yeah.
So basically, that insurance, it brought it down to 2,800. So
Mhm.
I almost cut it in half, but it's still $1,000 more than it was previously. Just so you know, my mortgage payment on that property total, with interest and what is it called?
Taxes and insurance,
Taxes,
escrow. Yeah.
escrow, yeah.
Yep. Mhm.
Except for the insurance is $950, I think, and I pay an
Right.
insurance
Yeah.
insane, like
Yeah.
2,600.
Yeah, and that can be really confusing for a lot of people in their mortgage because you don't think about the escrow account, which is your property
Yeah.
taxes and your property insurance. And so your mortgage went up by, $1,000 a month or whatever. And you're like, why did my mortgage go up? How is this bank screwing me over or whatever? And the reality is that it's almost always, most residential mortgages are fixed rate mortgages. Very few have adjustable rates. So almost always the only reason your mortgage changes is that escrow account, those property taxes and that property insurance.
Well, taxes went up too, by the way. Like,
Yeah,
I'm like,
yeah,
this is
right.
insane. Taxes
Yeah,
went up and insurance went up, and my
yeah,
mortgage, went from, I think it was $1,400 a month or $1,500 a month to $2,100 a month.
yeah,
So I'm like, Okay,
Real.
that's a pretty big increase. That's a 30% increase in my
Yeah.
uh
Yeah.
it's an investment property, so it still makes enough money. Okay, guys, don't have to be scared about me here.
Yeah.
But still, if I wouldn't have that nice cushion above it, then it would be like, oh my God, what am I going to do? The average
Mhm.
person with their average home in a flood zone now, I also have to have flood insurance on that property, which is additional coverage. We could talk a little bit
Yeah.
about that, maybe. Can you elaborate on that?
Yeah, sure. So your homeowner's insurance policy has things that it includes and things that it doesn't include. Back in the old days when travelers insurance started in the early 1800s, they only covered one thing, and that was fire, right? If you had a fire, your policy covered it. If it was anything else, it was not covered. Since then, we've added more and more things, wind, hail, and lightning. All these different things have been added to a policy, whereas insurance today covers lots and lots of things. But oftentimes, specific things are excluded. In California, many of the folks who lost their homes are learning that wildfire was excluded on the insurance policy that they had. In Florida, many people have insurance policies that exclude hurricanes, right? And lots of insurance policies. In fact, almost every homeowner's insurance policy that exists specifically excludes flood. And flood is the natural rising of water. It doesn't just happen where your house is in Daytona Beach. It happens where my house is in Bloomington, Indiana as well, right? It can be the natural rising of water from a river. It could be a natural rising of water from a lot of things. And so flood insurance is a specific coverage that is excluded on most homeowners policies. So you have to buy it specifically. In a place like your house where you've got, it's a high risk flood zone,
Yep.
your lender is going to require you to carry flood insurance. Flood insurance isn't very profitable for insurance companies, and so the flood insurance program was built by FEMA, and so there's flood insurance that comes from lots of different places, but one place you can purchase it, just like Citizens in Florida, is from FEMA through their flood insurance program.
So I think I have mine. I used to have mine through Neptune, which was a side place.
That's a private, yeah,
Yeah, it was
that's
a
a yeah.
private insurance company,
Mhm.
and then their price went up like $500 or five or six
Yeah,
hundred, almost doubled.
yeah.
And I'm like, you doubled your price, but I had no claim on my property. I just
Mhm.
sometimes it blows my mind. I'm like, I had zero claims. I'm pretty much self-insured. If anything goes wrong with the place, I go in and fix it, so I don't have to put a claim in because
Right.
it's an investment property. So at the end of the day, I'm going to sell it, and if
Mhm.
there's no claims on it, it's easier to sell.
Yeah. Yeah, no, that's right. I mean, that's a good point is that in personal insurance, your homeowner's insurance, when you move from one home to another, you don't get penalized if that home had claims on it, at least in
Yeah.
most states. But in commercial insurance, you do. Part of the process with commercial insurance is that you need to get loss runs from the owner, right? A lot of times your broker can get that for you. And if the insurance company finds that the previous owner that you're buying from had major claims, that is going to affect your insurance premium when you buy that property. That is different between a homeowner's insurance policy and a commercial insurance policy.
That's great advice, man. For investors, guys, make sure you get that. What was the information called? Rundown or
Loss runs.
loss
So
runs? Yeah.
yeah, if it's commercial, now if you're doing, it really can kind of depend. But if you're buying a property that's 4 units or fewer, it's usually considered residential, and you may
Yes.
not have to get loss runs. It's just like lending, right? In lending, 4 units or fewer is one kind of loan. 5 units or more is into the commercial space. That's true with insurance as well. 5 units or more generally is where you have to get loss runs, and loss runs are simply a report from the old insurance company that says how many claims there are. In the home and auto world, there's a system, a national system, where anyone can pull claim information. In the
Wow.
commercial world, there isn't that system. And so you have to manually go to the old insurance company and say, hey, can you print me or send me an email with the loss runs?
I always talk with my good buddies, and Sean. They're in commercial real estate, and I'm like, you guys, that's the Wild West, my friends.
It
Like,
is.
yeah,
Yeah.
absolutely no boundaries there. It's like whatever happens. When we were buying this property, our lender backed out of lending about 5 days prior to closing. Like, I'm not lending you guys the money. And like,
Yeah.
dude. And then the guy was like,
Yeah.
well, if you want to keep the deal running, you get 1 month, put an extra 100,000 down, blah blah blah. And we're like, we pulled the short end of the stick for the lender pulling out the last minute. I said, you could do that the last minute? Like in
Yeah.
residential, that's
Yeah.
impossible to do. If they do
No.
that, they get penalized for that
Yeah.
massively.
No, absolutely. And commercial insurance is the same way. It's also the
Yeah.
wild, wild west, particularly commercial property insurance, where you get to what's called excess and surplus, right? Standard insurance companies, ones you've heard of before, Travelers Insurance, State Farm, a lot of these companies, they have to follow the rules of the state. They have to file their rates with the state. There's all these rules that protect consumers from an insurance company taking advantage of you. Excess and surplus is the wild, wild west. You do not have to file the rules of the state. You are not controlled by any of those things. You are not admitted to those things. And a ton of people have excess and surplus policies. One positive to that, though, is that because they don't have to file for rates. So right now in 2025, we're seeing excess and surplus prices come down. And so
Nice.
for property insurance, I have multiple clients who I'm giving them to 15, 20% increase or renewal premium decreases. Actual premium decreases. I know that a lot of people haven't heard of that. That is when the money goes down instead of up. And so we're seeing decreases because it is the wild, wild west. They can also go down faster, right? They can go up faster, but they can go down faster as well. And so I'm seeing a lot of relief, thank goodness, in our larger portfolios around the country. Texas, Florida is different in every way, in almost every sense. But most of the country, we're seeing that decrease from excess and surplus, but we're not seeing it from standard companies yet, because they're
Still holding
slower.
on. They're
Yeah,
slower.
yeah,
Yeah.
they're still holding on. Yeah, yeah, exactly.
We talked a little bit about, Florida and Texas and what's the difference and all that. Could you tell me about it a little bit? Like
Yeah. So
what?
insurance is sorry, sorry.
No, no, go ahead.
Insurance is state based. I think that's the foundation of the problem. And so insurance is state based. And so insurance companies have to decide, do I want to go into a state or not? You don't have to go into a state. No one has to go into a state. And so when you look at a state like Florida, it's easy because basically all of Florida is coastal. There's no part of Florida that doesn't have a coast somewhere close. But a state like Texas is interesting. And I keep coming back to Texas because I'm just fascinated by this state and how insurance is working in it right now. Texas is not primarily coastal, right? It has a coast. There's absolutely coastal parts of Texas, Houston being the most populated one. But there's Dallas, there's everything up to the west and the north and the east. I mean, an entire state. But all these insurance companies, because of some hurricanes, because of the big freeze in 2021, I don't know if your listeners remember that, but yeah, the Texas like infrastructure went out and it was very
The
cold.
windmills. Yeah.
Yeah, and the problem with that was burst pipes, right? Like all these pipes weren't insulated because they weren't used to how cold that cold. That was the largest single property insurance claim in the history of the United States, at I think $5 billion. And so that kind of thing then makes insurance companies run out the door. So all these insurance companies are leaving Texas, and then suddenly you've got rates, going high in Dallas and going high in San Antonio, places that have no coastal exposure. And so I think that the state-based part of it is really, really important to understand because if there's no insurance companies in the state, then that's going to be a supply and demand issue. You don't have as much supply and you have high demand, prices are going to go up.
That's pretty much the same thing in Florida right now.
Yeah. Well, Florida, what's interesting about Florida is we've known for a long time that hurricanes exist in Florida. Like
Yeah.
hurricanes are going to hit Florida, they're going to ravage somewhere. And so Florida has been like 2007, 2008 is when a couple of hurricanes came through right in a row, really hit hard. That's when Citizens was created, I believe. And so the thing about Florida is when you're investing in Florida, you usually know that insurance is expensive. You're putting $2,000 a unit or $2,500 a unit, or if you're in Miami-Dade County, maybe $3,000 a unit. You already get it. You already exist. Know it's there. It's already built into the system. Texas has just had this happen, right? 2021 is when the big freeze happened. And that was really kind of the catalyst for what we're seeing. And so it's just been the last few years. And so investors are used to seeing an insurance number that's drastically lower than what it is right now. And that's kind of why I mean, it's interesting in a bad way. I mean, it's interesting to me, but it's not good for investors who bought in 2021 with a $500 a door for their underwriting, and now they're looking at 1,500.
Yeah. So how do you mediate that expense? Do you like jump rents suddenly? Like, hey guys, so now my expense just kicked off and tripled on my insurance costs. So all rents are going up by, triple. Like that's crazy. Think about it.
Yeah.
And then I know I'm not a big fan of big government, but in these instances, it's just what can they do to step in
Right.
and help mediate the situation? Because yes, insurance companies are for-profit companies, but guess what? Every insurance company, if any company fails, guess who buys them? An insurance company usually. If a
Right.
bank fails, an insurance company comes in and bails them out and buys them because they're the ones that collect the most money
Hmm.
because of the mandated you must have insurance, you must have
Right.
so if the government could say that you have to carry homeowners insurance if you get a mortgage, or a mortgage company says that you have to have one, or if they can mandate that you need to have a vehicle insurance if you drive a vehicle, that means
Mhm.
you got to pay them money no matter what. Then they
Right.
should mandate them that they have to offer policies at a decent rate in every single state if they want to get their auto policies and their
Yeah.
homeowners.
And
you
that
know
does exist. The
yeah.
government, like I said, for admitted companies, you have to file for rate increases. So interesting right now in California, recently the fires in Los
Yeah.
Angeles, State Farm is currently filing with the state for an immediate 22% rate increase to make up for the amount of losses they're paying out. On the other side, they're not usually allowed to ask for rate increases until a annual basis, right? Once a year they can ask, and the government can say nope, and they usually do say nope. I mean, they don't say entirely no, but usually the insurance company says I want this, and then the government says no, you can't have all that. There's a back and forth. And so, in some ways, the government in different states is doing it different ways, but that's where some of that regulation happens. And in some cases, like citizens in Florida, the government will truly step in and just say, look, we're going to replace the market because of the situation that we have. And so the government is involved in a lot of ways in these conversations. But could they be involved more? Now we're getting into a political conversation about
Yeah.
you get government involved too much. Now so there's the back and forth of that.
Of course, of course. I mean, California it's a pickle, but I'll be honest with you. I do construction somewhat. Dabble around in it, and the cost of building those houses back is not as much as they think it is. Like they value those houses way too high. Like
Hmm.
because it's like location brings you value. Where those houses were sitting. It's not
Right.
the actual home that you build on the land that costs a lot. You
Right.
understand where I'm coming from. So to put up, a regular single family home in my area, you could
Hmm.
probably get away with, 150, $200 a square foot
Right. Right.
on a build price, with a simple finish,
Yeah.
and that's with roof and everything. Now that's probably the same case over there, uh,
Yeah.
you know. So, but they're like, oh, my house is worth 6 million. Your
Hmm.
house, location wise, possibly,
Right.
but
Three
your
million
house,
of that is the land itself.
yeah,
Yeah.
yeah, yeah, yeah. But the
It.
construction's not, like so
Yeah.
rebuilding your house won't cost you $6 million.
No. No, but
Shouldn't do.
it might cost you more for a variety of reasons. One of the biggest reasons it's going to cost more is it's not just your house that needs to be rebuilt right now. It's, whatever it is,
Infrastructure.
10,000
Yeah.
houses at the same time. And so every good construction person is taken. And
And
so, one of the things that states often do is regulate the increased material cost and the increased labor cost. So they say, look, you can't be out there poaching people because they're in this bad situation. But if you're a contractor, there's only so many contractors that can do it. And so
yeah.
that's a factor. The cost of materials will go up in some way, even if it's limited by government regulation. But you're right. I mean, $150 to $200 a square foot in most parts of the United States is doable for a standard home. Most of those homes weren't standard homes, but say whatever square footage you want to say, or whatever,
Uh, uh, uh,
250, 300,
yeah.
yeah.
It's still
It's,
not $6 million
yeah.
for the square footage.
Yeah, no,
That's
exactly.
my thought. They're going to be a lot of people making a killing like they do during the hurricanes here too. Like
Hmm.
Florida's, it's notorious here when the hurricane comes through. All the contractors, subcontractors, handymen that don't even know how to measure.
Yeah.
Everybody becomes the the guy
Everybody's a contractor. Yep.
exactly
Yep.
rushes through the part of the
Mhm.
state what got ravaged and picks up jobs all over the place to mediate the damage, which is great because it gets built up fast again, but
Yeah.
it's a lot of money out of those pockets. And I've asked some of the people here in Port Orange that I've worked with that had flood damage the last hurricane and the hurricane before that, and they showed me their bills for a renovation of a 1,300
Mhm.
square foot house. They're not putting a new roof on, they're not building new walls or anything.
Yeah.
They're replacing floors, a couple cabinets, some drywall work, and they're like $60,000, $70,000. And I'm like,
Yeah.
that's insane. And that's what the insurance company pays out.
Yeah, well, what's
You
interesting
know?
is that yeah, there are good guys and there's bad guys in almost every story, and certainly insurance claims is a place where you see all of both. As people have been listening to this episode, they're hearing the things I'm saying and say, that insurance company, those jerks. And absolutely correct. I'm not judging that
Yeah.
perspective, but there are so many other there are great people in this mix too, and lots of great stories, but there are people who are taking advantage of insurance companies as well, right? Where you see like an example like that, where you got a $20,000 renovation at most, and they're billing the insurance company $60,000. Well, if enough people do that, hey, that's great. They took advantage of the insurance company, they screwed the man, or whatever you want to say. Okay, but it came back around on the other side, and now we're all paying for it.
Everybody's paying for it.
Yeah.
That's how my insurance probably tripled.
Uh-huh.
I was with First American,
Yeah.
something like Security First, and it was
Yeah.
like great
Yeah.
policy, everything good. I'm like,
Hmm.
it's a block flat. Okay, it's a flat roof, full block. Even the interior walls are block. So
Yeah.
tell me, if a flood happens, the only thing I need to take, and it's tiles underneath. I put down
Right.
LVP on top of the tiles. Put some
Yeah.
bearing in
Yeah.
between. So the only thing that could actually get damaged is the little kitchens with the
Right.
wooden counters and the appliances, which here comes Home Depot pricing in a couple grand, maybe two three
Hmm.
thousand dollars,
Right.
and some labor, maybe $5,000 per unit, and I'm back up and running.
Yeah.
Uh, it's
It's
just
tough. It's
yeah,
tough, yeah, because then you have on top of all the things we've talked about, then you have public adjusters who come in and they say, "Hey, look,
oh
I'll
yeah,
help you with the claim. I'm gonna get a bunch of money from your insurance company," and sometimes they legitimately help. That is the problem with any judgment of any group of people in these conversations. There are good people and there are bad people in
yeah,
every single one of these sectors, and public adjusters is one example of them. They're out there, then they're mucking up the process. They're just making it stretch out really long, ending up trying to get a bunch more money. And then there's other public adjusters who are truly helping you navigate an insurance company that would not have taken care of you maybe as well
yeah,
as it would have. And it's hard to know for the everyday person, like and that's just a part of life, is like, how do you tell who you can trust and who you can't? I guess one way is, once you know you can trust someone, keep them on your side.
for
That's what
sure,
building a team is all about, you
for
know?
sure. Hey,
Yeah.
one last question: if you could give just one golden piece of advice to a real estate investor when it comes to insurance, what would it be?
I think it'll be full circle from the answer to the first question you asked me. Find someone you trust and stick with them. That when you're dealing with insurance, you need, especially commercial real estate insurance, you need someone who understands what they're doing, who has access to as many markets as possible and as many insurance companies as possible, who can speak your language, who knows how commercial real estate works, and ultimately, hopefully, has the best price, but at least is close. Usually the cheapest policy is not the best policy, as we know in all products. And so my one piece of advice would be, just like every other team member you have, find someone who is on your level and works with you, and stick with them through your journey.
Awesome. Jeremy, this conversation has been incredibly insightful. You've broken down the complexities of insurance in a way that, empowers investors rather than overwhelms them. For those who want to learn more or work with you, where can they find you?
Yeah, well, Lancelot, thank you so much for having me. Shineinsurance.com is the website. As far as if our YouTube channel, Shine Insurance, we've got a bunch of videos, tutorials, how to deal with insurance. And then all of our podcasts, we have the show, CRE Clarity, and you can find us there.
Oh, that's awesome. So guys, hit him up, get all that. To our listeners, whether you're just starting your real estate journey or scaling your portfolio, protecting your investments should always be the top priority. If you found today's episode valuable, don't forget to subscribe, leave a review, and share this with the fellow investors who need to hear it. Until next time, keep investing wisely, and we'll see you on the next episode of the Real Estate Roundtable. Thank you, everybody. Have a wonderful day. Thank you for joining us on Sir Lancelot's Real Estate Roundtable, where we've unveiled the mysteries of real estate together. Remember, in this kingdom of possibilities, every dream home is just a discussion away. I can help your real estate dreams come true. Just call me at 786-449-7518. Until our next roundtable, may your ventures be prosperous and your homes be filled with love and joy. Farewell, fellow knights of real estate.